But I had written a book. I'd written the article in the North Shore News for the North Shore Credit Union. I wrote a book in 1979 called David Ingram's Ultimate Investment Guide, and it sold quite well, 55 or 60,000 copies or so, and published it in the BC Business Magazine and had it in the Ontario Dentist Magazine and a whole bunch of other stuff. And a fellow named Fred Snyder, and you can find Fred Snyder, he's a guest on here once in a while. Every Sunday morning he does a program on CIL Radio, which is 6:50 a.m. in Vancouver. It's on from 9 to 11 o'clock every Sunday morning, and you can get it at radio650am.com and listen to it live if you happen to be in Saudi Arabia watching this. Anyway, making a short story long and a long story short, Fred Snyder got hold of my book and started making a series of seminars on the topic. And when he made the series of seminars on the topic, he taught one of his classes to Macaulay Nichols Maitland, the firm of realtors at the time. And I think it was March '81. I got a copy of a letter here someplace. A fellow named Fraser Smith, who had been the manager of the Kerrisdale branch of the Macaulay Nichols Maitland, wrote Fred a letter and said, "Thank you for explaining this to me." And then 4 years later, Fraser Smith went out and wrote the book called The Smith Maneuver, which has been a big seller on how to make mortgage deductible. And it goes on and on and on. Vancity Savings Credit Union picked up the concept, and for a while there, it was part of their community and what they did. And you could go into a Vancity Savings Credit Union with a copy of The Smith Maneuver, and they'd arrange to make your mortgage deductible. Unfortunately, they're not doing that anymore. The only good credit union in town, well, I told you in the last part 2 of this series that Richard Rochard, the manager of the Greater Vancouver Community Credit Union at 25th and Canby, set mine up to do it. Envision Credit Union has a program called Red Frog that does it quite nicely. But we beat North Shore Credit Union over the head a couple of years ago to get them to set it up for one of our clients. And the best place in town likely to do it is Manulife Bank and their Manulife One program. The problem with that program is that it's really hard to qualify. They just cherry pick the people that they're going to put in it. So everybody can't do it. You got to sort of have those gold gonads, and you don't need the money for Manulife One to set it up for you. And I guess that's all I can say about that. But anyway, Joe Clark brought mortgage interest in as a deduction in Canada, which would be the fairest thing to do. Pierre Trudeau canceled mortgage interest as a deduction, which was very unfair. And that's where we stand today. Anybody can make their mortgage deductible if they want to in Canada. They might have to change their job. They might have to do some things. But it can be done, and it's worthwhile to do because, again, as I said, I have a $500,000 mortgage. Call it 5%. It's only 4%. But if it was 5%, I'd be paying they do it at 4%. 4% of $500,000 is $20,000 of interest. If the interest isn't deductible, I got to do $35,000 worth of, got to make $35,000, pay $15,000 tax to have $20,000 left over. If it's deductible, I take $20,000, pay it to the government. Government gives me an $8,000 or $9,000 refund. So I only need $11,000 instead of $33,000, $34,000, $35,000. And because I'm self-employed, to have $35,000 left over after I pay my staff and expenses and advertising and phone bills and fax and paper and Richard for running my computer system, after I do all that, I have to do $100,000, pay $65,000 worth of expenses to have $35,000 left over as a profit, pay $15,000 worth of tax to have $20,000 left to pay the interest. If it's deductible, I really only need to earn $12,000 or so. I'll prove it to you. If I earn $12,000 and somebody loans me $8,000, I am home free because I pay my $20,000. Government gives me $8,000 back. I pay back whoever I loaned the $8,000 for. I only need 12. Well, really, I need 20,000, pay some expenses and so on to have 12 left over. But you get the idea. Instead of having to earn 100,000, I only have to earn 20,000, and that's a good part about it. And that's what I'm going to say.